Welcome to FOMO Consulting for your daily AMC stock analysis video on Sunday, July 25th. Ladies and gentlemen, let's go over this week's battle plan. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I appreciate the support. Let's get into the video. So thank you again to each and every one of you for your very kind words, your support. It has been overwhelmingly positive, and I cannot thank you enough. So thank you very much. So let's start with a quote. Tactics win battles. Strategy wins wars. Our opponent has certainly used tactics, whether it's FTDs, naked shorting, shorting through ETFs, you name it. I'm sure they've done it over the last 3 or 4 weeks. We've certainly felt the effects of that with the heavy selling pressure. But the strategy of the apes, diamond hands, retail investor has not changed, which is buy and hold, right? Certainly not financial advice. Just a quick reminder of the broader market. Good day, good way to close Friday. Russell 2000, we really needed to get in gear. This week could be really good, very volatile. Just a lot of things going on. Certainly Tesla, Apple, Microsoft, Google, Facebook, Amazon, all reporting earnings. As a matter of fact, 165 S&P 500 companies are reporting earnings. Just an absolute crazy week ahead. The Fed is scheduled to meet, and anytime that happens, it always puts nerves in the market. And there's some other reports coming out later in the week, I believe, on the 30th. So just a lot of potential volatility, bullish and bearish, that could affect the overall market. But again, we need specifically the Russell 2000 to get going. Earnings date over the last, in the next couple of weeks, not confirmed, around August 5th. Certainly could be a catalyst for AMC. Let's look at crypto. Overall, crypto down this morning or today. Not anything terribly crazy, 1-2% across the board, but overall, crypto has somewhat stabilized, it would appear, and hopefully a bullish run is in the near future. So one thing I want to show you here is some of the quote-unquote safe stocks, FANG stocks, the smart money stocks. If you look at Netflix, since really early 2020, it's a major competitor, obviously, with the movie theater industry. We've certainly felt the effects of that through COVID or whatever, and they did honestly grow. But as you can see, they've really just kind of bounced around, within that channel for really the better part of a year. So overall, Netflix, being a smart money stock, has not certainly outperformed AMC or GME. Disney, same thing, had its run up, certainly. A lot of Disney Plus subscriptions and what have you, but over the last 6 months or so, it's just kind of consolidated within that $175 to $200 channel. Certainly not, very impressive, right? Tesla, same thing. Obviously had its big run up, heavily shorted. Pretty well just consolidated really for the last several months. Nothing too terribly crazy. Apple has certainly done relatively well lately, but as you can see, kind of consolidated around that $120 to $140 range for really 6-9 months. So again, the smart money stocks, haven't been doing all that well as compared to AMC and GME. So we certainly have nothing to be ashamed of being investors in AMC and GME. Google has done quite well. Again, they have earnings coming up this week as well as some of these others. But overall, we've had some red days, some red weeks, but no different than some of these other smart money stocks, right? So this last Friday, obviously options were in play, nothing too terribly crazy. I found a lot of confidence in the fact that there was far more puts in and around where we closed the week at $36.99, but it could have been far worse, at least from a price action perspective for us, because as you can see, down to $30, there was a lot of open interest. Not so much on the put side. $40 was really the heaviest consolidation, at least nearby, on the closing price. So overall, let's look at what this week brings. Currently, the call volume as of Friday was much higher than put volume, as it has been over the last several months. Open interest is certainly higher on the call side than the put side going into this Friday. Really, on the put side, the heaviest concentration is about 18,000 contracts, open interest at the $30 strike. We currently sit around that $36, $37 range. Nothing too terribly crazy there. At the $40 strike, about 10,000 contracts at the $40 strike, nothing too terribly crazy on the put side. And then you see a heavy consolidation in volume around the $50 strike, which leads me to believe it likely may be a pretty bullish week overall. Nothing too terribly crazy, but we could very well get back into the 50s. Again, German apes had a bad Friday, but keeping things in perspective, had a green week and the first one in quite some time. So well done, German apes. Let's look at AMC. As we all know, found its bottom earlier in the morning and then recovered throughout the day. We closed at $36.99, down 25 cents. Again, I think it was a particularly strong Friday, especially with options. Could have been far worse. We held it very strong. Certainly whales were behind some of the price action, but overall, I'm looking forward to a green Monday, and we'll see how that plays out. And as you can see, the Russell, we pretty well mirrored the Russell 2000 throughout the day as well. IWM, directly linked to the Russell 2000. You can see we mirrored it almost to a T, as well as the overall broader market of the Russell 2000. And we need IWM Russell 2000 really every day to help kind of support AMC, as it is the heaviest weighted stock within that ETF. So let's look at the 5-minute chart over the week of trading. Overall, it was a green week. It could have been much better, and I believe this week will be better. But again, we're kind of in a recovery period. Hopefully, we found our floor. Got down to $31 early on Monday, recovered early on Wednesday up to $46.50, and we closed the week obviously around $37. So overall, still a green week. It could have been far better, but certainly could have been. So looking at the 1-hour chart over the last month or so, we certainly know about all the heavy selling pressure. We've certainly felt that. It looks like we may have found the bottom, hopefully at $31. Heavy level of support. We've bounced obviously off of that now a couple of times. RSI and MACD look like they're poised for a bullish reversal. We shall see how tomorrow and Tuesday play out. So let's look at the 2-hour chart, a little slower, a little more dependable. Certainly RSI looks pretty good. MACD is about flat and just kind of consolidated, but we certainly recovered quite a bit over the last week. MACD does look like it would be poised for a bullish crossover and reversal to the upside. So let's look at the 4-hour chart again, a little more dependable. MACD, again, if you look at this past week, it's the first green you've seen since the big run-up, right? So it looks like some of the heavy selling pressure has calmed down somewhat. We are, again, somewhat recovering on the RSI, but have a lot of room to run. And as you can see, we have earlier, before the big run-up in early June, that level of resistance around $30. We certainly got on top of that. We have now used that twice, most recently. Hopefully we do not touch that again, because the more we knock on that, I believe, the more apt we are to fall through it. And again, we need to break that, let's just call it $37 to $40 range of resistance. You can see where it held as support on several occasions as we bounced off of it, over the last month or so. We need to re-break that, I believe, this week and hold it as support. So here's a couple scenarios going into next week. So again, RSI a little bit below neutral, has a lot of room to run. Looks like the heavy selling pressure on the MACD has somewhat subsided. We could be poised for a bullish crossover. We certainly need to do so. On the far right, as you can see, I've got a couple just hypothetical scenarios that I'm playing out. We know about the $30, $31 level. We've bounced off of that a couple times. That is absolutely critical. We hold that level of support. We could very well, tomorrow early bounce around, and this is my bullish kind of thought process. The bullish process, thought process really goes around maybe touching the 36, $35 level, and then bouncing pretty early or midday. I think we will approach that $40 level, low 40s, maybe get a rejection, come back down, retest again, break through it, hopefully hold a support, and at some point later in the week, maybe reattack $50, likely get rejected. Again, that's a pretty heavy level of resistance at this point. But 50 on the call side, as I showed you, there's a lot of consolidation around that $50 level. This would be the bullish case scenario for me personally. If we get into a bearish scenario, holding that $30, $31 level is absolutely key. If we broke that level, I think we could be back into the mid 20s, quite honestly, pretty quickly. So, again, that $30, $31 level is a really, really critical level that we hold, even if we touch it. My best case scenario is we get to 35, bounce, and then, start our bullish run. Hopefully that will be the case, but we'll see. So one other look that we usually don't look at is the weekly chart. So if you look at the weekly, the RSI took a long time, even with all the heavy selling pressure. We jumped up so fast in early June that it's taken a long time to get it back into the channel. Now we've been on top of the neutral side of that really since January, which is very reassuring, even with all the heavy selling pressure. But as you can see, also the MACD is taking a long time to kind of cool off and kind of get back into a more normal pattern. And on the weekly chart, although he's closed his mouth a bit, the alligator is still very, very hungry. So let's look at GME. Overall, GME from a daily chart, again, it looks like no different than AMC. The heavy, heavy selling pressure that it's experienced over the last month or so, no different than AMC, may be subsiding. Hopefully, it's ready for a bullish run. Certainly, the indicators are set up for that. Obviously, we don't know what our opponent is planning to do, as you can certainly see where things look a little bit more inviting for a bullish upside run, and I believe it will happen over the next week or two. So again, let's look at the short interest data, 38 days average age of the short positions. Nothing much has terribly changed there. And the short interest trend lines, as you can see, we know that Ortex kind of reset some of their data, but currently no major change over the last week or so. Shares on loan has gone down just a little bit, at least over the last week, but nothing too terribly crazy. We're still around 94 million, which is substantial. Around 50% short interest. Cost bar about 1.5%. Utilization 88, so still very high, but not as high as it was about a week ago. Again, the most bullish thing for me personally is the institutional ownership at 437 institutional owners that are and 396 are long only. That's increased by about 5 over the last week. And we had decent volume. Obviously, Fridays are usually a little lighter. It'll be interesting how the volume is tomorrow. Anything, say 130, 150, I think is very bullish for us. Anything, under 100, who knows what's going to happen. But we were at 85 million. Short shares available according to Fintel, 850,000. So we'll see how this plays out. Let's close with a quote. Never confuse a single defeat with a final defeat. We've certainly had our days where we felt defeated. That's exactly what they want. We've had some big red days, some small red days. We've had a few green days here and there, but over the last month, it's been very trying, obviously, on the psyche, on the nerves, on the resolve. But certainly, I believe over the next week, if not two, we should see, if all things play out correctly, at least a bullish run. We'll see how far it gets, but the indicators would lead me to believe that. we've kind of hit at least a subsidence in the heavy selling pressure, but we'll see how it plays out. So as always, I want to thank you all for watching. And if you did find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel. But again, thank you very much for your support, and I hope your life is full of green candles. Talk to you soon. Bye-bye.